One of the most famous trading quotes of all time comes from Jesse Livermore. You've probably heard of him before, right? The quote says, "The money is made in waiting, not in trading." And what he means by that is that if you are able to understand when you should not be trading, you're going to avoid the losses that cause most people to go broke and give up on this business. So today, I'm going to share with you the days that I avoid trading and the news events that I avoid trading into. There's specific days of the week sometimes, there's specific holidays that I avoid, and it's really easy as a Forex trader to know when those events are coming. Probably a lot easier for me today than it was for Jesse Livermore back in the day. But the point here is that there's a lot of value. You can hear it from Jesse Livermore, you can hear it from other successful traders, and you can hear it from me. There's a lot of value in being able to avoid certain trades that are lower probability. You should have systems and rules in place that put you in the highest probability trades possible. So if you're new, my name is Austin Silver. I appreciate you being here. We're going to flip over now so you can take a look at my screen. I want you to see first we're looking at forexfactory.com. This is my go-to news website when it comes to Forex news. Now, there's a lot of Forex news websites, macroeconomic news websites that you can use, but I really like how simple and direct Forex Factory makes it for us. So we're looking back into last week, specifically the first Friday of April. It's also the first Friday of quarter number 2 this year. You can see that as every first Friday, we have our non-farm payroll numbers. The non-farm NFP event that happens every first Friday of the month is one of, if not the most volatile news events that happens for us in the Forex market. It might be one of those events that you think you can predict and trade on, but even so, because there's so much speculation going into the event, it actually leads to extreme volatility sometimes and unpredictable moves. Now, this is one of those scenarios that I believe Jesse Livermore would say it's better for us to wait. Now, that's just opinion-based. The facts behind that are shown when we do backtesting behind a system of rules, like I mentioned before. So when I go and backtest the A1, D1, and D2 systems that we trade and teach at ASFX, and those backtesting statistics tell me that that first Friday, we always get chopped around, we always find fake out entries, and we always find more losses, why would I place trades there? So now we're matching an opinion, a belief, with a statistical fact, and together that can help you avoid lower probability trades. So the first thing, if you're taking notes, NFP is the most important news event that happens in the Forex market. It's on par with any bank rate statement, on par with every governor of any central bank speaking. Those are the highest impact events, and they're normally labeled with red folders here on Forex Factory. And those are the events that I'm always going to avoid trading into. If you look ahead to this week, not a lot of red folders, Tuesday, Wednesday, and even Thursday. But if you look ahead to Friday, we have 8:30 CAD unemployment rate news. That's high impact. Those red folder events, I would be very careful trading CAD before this news event at 8:30 New York time, and I would not hold my trades on any Canadian dollar pairs going into that news release. Because as much as we can forecast and try to predict what it will be, we can still see volatility in the market. You might be right. I'm often right on the direction that I think NFP and some of these events will take the market, but that doesn't mean I can go in and make money, right? As you've heard me say in other videos, you need a bias, which is that, and a trigger signal, which that is not. Trading a news event is not a tested trigger signal for me. So those are the events that I would avoid completely. Now, the thing to keep in mind, if you're looking at a CAD high impact event, but you're trading GBP, JPY, that's not going to be as impacted as if it was a USD news event, like the NFP event. USD news events, because the US dollar controls majority of trading around the world, it's denominated in US dollars, US dollar news events are going to shake all pairs, whereas CAD or GBP news events might not shake NZD or JPY. I hope that makes sense. If it does, make sure you hit the thumbs up button. That's how I'll know you're understanding me so far. So now I want to switch over to my chart. This is EURUSD. We're looking at the 15-minute chart. This vertical line is the day separator. So you're looking back onto Friday. I have NFP labeled here, and then you're looking forward to today. We're going to just look at a couple currency pairs so you can see first how high impact events shake things up. So look at price action here going into the non-farm payroll event. If you were looking at this Thursday into Friday, all it was doing overnight from the London session on Thursday into the New York session on Thursday and then into the Asian session on Friday, all it's doing is what? Moving up. Higher lows, higher highs. So coming into Friday, it would be very easy to see it respecting the low set in the Asian session at 117.70 and say, hey, if it holds above that, I'm going to be long biased and I'm going to look for trigger signals to buy this. But as you can see, it develops and actually ends up finishing the day lower. Why do we think that may be? Well, let's go back to Forex Factory. You can see that the non-farm numbers here were good for the US dollar, and they were forecasted to be good for the US dollar. So here, the forecast was 600K of added jobs. We actually added 900K. That's fantastic, right? If you care about the jobs report. You can see the unemployment was forecasted to go from 6.2 down to 6.0. That's another good piece of news. So when you see forecastable, this is posted before the news comes out, the forecasts are looking good for the US dollar. That normally tells us to push EURUSD down, and the dollar index will move higher. As you can see, that actually didn't really happen to the extent that you think it would on Friday, right? On Friday, it doesn't really move much. Here's that NFP pin. There was a little bit more volatility here with these massive pins in the afternoon on the dollar index, but it didn't move a lot higher until we started to trade overnight going into Monday. Now, we had some news come in last night that ended up bringing it lower, but to stick with our NFP point, you can see NFP comes in, the news is good for the dollar, so dollar index moves higher to finish the day on Friday, and EURUSD moves lower. So it kind of killed the bias that we had on EURUSD, but it was forecastable. So again, we're not going to trade into that, but we're going to be aware this long bias might change because of the news forecast that's coming, and we don't want to get caught in this massive pin here when NFP breaks. That's 29 pips up and down. That might not seem like a lot to you, but the range of this all day was only 38. So it basically moved high to low, hitting stops, triggering people out of the trade, all within 15 minutes. Honestly, it happens within 5 minutes. It's very quick when these high impact events come out. That's what volatility can do. If you look at some of these other pairs, I was also watching GBP CAD on Friday. Look at the pins here at the end of the day. You see all those pins? That's what you're going to see going into the next point that I want to make. Going into bank holidays, you're going to see increased pins, which means there's increased volatility, but there's not as much volume in the market. So NFP and high impact events are the number one thing that I'm going to avoid trading into. The second thing that you have to be aware of is bank holidays. Notice Friday was a bank holiday for GBP going into Easter. Here on CAD as well, it was also a bank holiday. On Sunday, you had NZD, AUD on bank holiday, and then even today, the Swiss franc, the French banks, the German banks, the Italian banks, and again, the GBP, the pound, all the banks are closed. So to come in today and to try to find opportunities, you're going to more often than not get chopped around because banks are closed. Particularly, again, back to the dollar, if the US banks are closed, President's Day, Christmas, those days, it's very hard to find solid structure and solid trades because you're going to find more pins, more volatility. Go back to what I just said, because there's no volume on bank holidays. It's simple. So make sure you're checking Forex Factory every day before you get to the chart. Look at tomorrow, Tuesday the 6th. Nothing that scares me. I'm not even trading at this time at 12:30 in the morning New York time. So when I wake up, I'm not worried about any of this. Yellow and orange folder news events don't really scare me at all, and you should trade right through them. Notice though, when you see these pins, it will correlate with bank holidays. Even if we look at GBP USD, same thing. Look at how it finished the day. NFP hits here and it just chops after NFP going into the weekend on a bank holiday. GBP here on Friday was on a bank holiday. So to see this volatility here, where it goes up and down 30 pips and then stays in that 30 pip range all day, you're not going to make any money there. Don't even try to trade it. Again, the money is made in waiting, not in trading. So if I can push one thing across to you guys with this video today, let it be that number one, you don't need to be in every trade idea that you see. Come to the market on bank holidays. Come to the market on NFP. But that doesn't mean you need to take trades. You got to have self-restraint. And then number two, there's two sets of main events that we want to avoid trading into, and they're identifiable very easy for you here on Forex Factory. Gray folders, bank holidays, that's going to dry up volume because there's no traders in the banks. The algos aren't running as high as they normally do. Dries up volume, increases the pins you see. That drives volatility. And then these red folder, high impact events, especially US dollar ones, be careful trading into them. Lock your stop loss if you're going to trade into it because it'll stop you out sometimes and you don't want to see it turn completely against you. You would hate to be up in profit going into a high impact event just to lose money on that trade. That's silly. So make sure you're locking your stop and managing the trades before the news events come in, if not completely avoiding them. There's so many traders that I know that will just take off from NFP Friday. They'll never even come to the chart. They'll come back on Saturday and Sunday and do their work then, do their markups then, because they don't even want to get distracted with the NFP numbers. They'd rather come in and trade when there's less speculation and less anticipation around these news events, which there always is going to be. We can look forward, I'm sure. Let's just see if I scroll down here. Core retail sales coming out next week on Thursday. That's a high impact event that's always going to be shaking the market. GDP comes out on the CNY here. That's going to shake the market a little bit just because that's another major global currency. If you look ahead on April 21st, a lot of CAD news at 10 a.m. And then here, all this PMI stuff on April 22nd, that's going to shake the market up too. ECB press conference at 8:30 coming in after the PMI news. That's going to be something that the entire market, big traders, small traders, institutional traders, everyone is looking at. So pull yourself out. The money in this situation is going to be made in waiting and then coming back when structure is there and there's no crazy speculation about what the Fed is going to say or what the Bank of England is going to say. Don't worry about it. Just let them say it and come back and trade when there's just less chaos. So that's my advice on how to make more money in the waiting as you're trading. I hope this video helps. If it does, make sure you give me a thumbs up. Make sure you subscribe, drop a comment. Let me know if it was just some new information to you or if you disagree with me. If you find, I would love to see it. If you find a consistent way to make money trading into news events, I'd be more than happy to discuss that with you. And by all means, good luck. But for me, for our tested systems, avoiding bank holidays, avoiding high impact news events, and sticking to solid structure, and when you get solid structure without this nonsense, without this crap, that's where we're going to make our money. The rest of it, we wait. And I'm fine with that. And so should you. You should be. I appreciate you guys very much. I'll see you in the next video.